Good morning, this is May Valensky with Driving Market. So as Saudi Arabia cuts production by 1 million barrels a day, that sends oil up to over $90 a barrel, and that's going to tick into inflation. I've been saying over and over again that inflation has probably bottomed out in the last numbers of July and August and likely to tick up. The real cost of living is much higher. When you go to the shops, or Joe Public goes to do his shopping or pays his rent or mortgage or any other expenses, whether it's personal or business, you can see that inflation is running well above the 3.5%, 4.5% or 5.5%, whatever is stated in the US, Canada, Australia. In the UK, inflation is higher. However, it is much higher than is stated, simply because your money does not go where it used to. It costs a lot more just to get through the whole month, and it's a lot more than the 5% or whatever the Western countries are stating. So now you're going to have official inflation is going to tick up, and that's going to put more pressure on the central banks, whether it's the Fed, whether it's the UK, whether it's ECB, or whether it's Bank of Canada, Reserve Bank of Australia. They're all going to have a tick up in inflation. Soft commodities also have slightly ticked up, especially due to the closing of the corridor of exports of wheat from Ukraine through to the West. That war is obviously going to continue and could take other further dimensions, but we'll go into that on another broadcast. Let's focus on where we're going regarding the economy. So as inflation ticks up, and the Fed will have to raise rates, the US Fed will have to raise rates by probably at least one more time, maybe two more times in 2023. That will have a further impact on the small businesses. Now, the landlords themselves are going to have difficulty collecting rent as the small business does not have the volume of activity or the revenue coming in order to maintain their costs, and that will feed through obviously to the lender and the banks that have loaned them the money. As a result of that, landlords will look at the yield on their properties and look at the yields they're going to get in the banks, and the yields on the properties are nowhere near as high enough to justify them holding the properties. So therefore they're probably going to sell their investments, and that's going to put more properties on the market, pushing prices down. As far as rents are concerned, rents will also go down, simply because when business goes down, we go into recession, there'll be less demand or less ability to pay those rents to the existing landlords. So you can expect property to move down over the next 12 to 18 months, which I've been stating over and over again. So far, I've got it slightly right on the property, but wrong on the rentals. They just seem to be going up and up and up. Regarding financial markets, markets are resilient at these levels. The bull trend is still there. Markets have not fallen off, and it looks like they want to be maintained. They came off slightly yesterday. The Dow was down 200 points, which is not a huge amount. The question is, where will they go from here? Will they hold on to these levels and then push upwards from here? Not too sure, because the Nasdaq is highly susceptible to higher interest rates. Markets are still overbought and overvalued, but who knows? As far as Wall Street's concerned, they control the show, and therefore they're likely to push prices back up there in order to finish 2023 on a positive note. This is May Valensky with Driving Markets. Have a good day.